Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be a very short and sweet cryptocurrency market update. We're going to try and wrap it up a lot quicker than we usually do, just simply because I'm very, very busy today, but still pack everything that you guys need to know in regards to today, tomorrow, and where the kind of cryptocurrency market is at. Also reiterating our bias, which I'm sure many of you that watch the channel daily are now familiar with. Ultimately, I think there's more downside to come for the crypto market and markets across the board. Markets since 2008 have been so dependent and really used to and have become accustomed to money being free and liquidity being constantly provided and propping them up. That situation, since the Fed and all central banks around the world, and we're seeing absolute catastrophe playing out in the UK markets at the moment, have came out and essentially gone, right, we've got this problem, which is inflation. We're now going to have to try and fight that. And the best way that we know how to do that using Paul Volcker's playbook is to up interest rates, make money more expensive, thus kill this kind of QE that we've had really since 2008. Markets have essentially just gone up. And it's important for me. This is if I had only known this back in November, we'd have had a lot more crypto and a lot more money set aside than we do. Don't get me wrong. We made a very good call getting out the market when we did. However, this is a mistake that I won't make again. This is 2008, obviously down here, and markets have just gone up. It's no surprise that markets have gone up with an inflating money supply. Look at what the money supply has done this whole time. It's just gone up, and then we had this huge rally. This is just really showing you and highlighting this is the M1 money supply, so the US money supply. When they proliferate money, the assets that are priced in that money go up. It's no surprise when we had the March 2020 sell-off, they had to do a shitload of printing, and essentially your monetary or your assets all went up with it. Every asset went up, gold, everything, cars, and essentially the Fed are going, oh, well, and actually what this caused was inflation. Inflation is a monetary issue. When you print a load of money, again, it's natural to think that, if assets are going up because you print a load of money, so are your commodities, so are your things that make up inflation. And this is really why they're now doing this tightening cycle. Now, there's a lot of interesting things happening right now. In my opinion, Bitcoin is just stalling, and the reason it's not sold off yet is simply because this is a key technical level. You are going to see, in my opinion, a $14,000 Bitcoin. And in fact, it's quite probable that you go sub that. Me and my community are prepped for that. And we've been prepped for a while now. We've even been prepped in terms of hedging our risk against, Euro and GBP risk and being in dollars. Maybe we're wrong, but it's paid us to be on this kind of and singing this tune so far. And I think that's going to continue to be the case. One thing I want to pull up, which I don't see many people talking about, is the open interests. Let me just tell you guys right now, the vast majority of people on YouTube and Twitter are not traders, are not serious investors. They are influencers, and that's where it ends, ladies and gentlemen. They're just kind of regurgitating news that's around there. What I try and do is be a little bit different on this channel and actually be a critical thinker about everything that's going on. Sometimes we do it well, sometimes we do it horrendously. I am not going to, and if anybody's following this channel because they think I'm going to get everything 100% right, guys, that's never going to happen. At the end of the day, really, when we're trying to predict the price of something and where things are going, you're trying to predict the future, and there's a whole lot of variables that you don't control that go into that. Any good trader that's worth his salt out there will know that we're not trying to take the price somewhere. We're just trying to speculate on where it may go and understand that we could be wrong and take probability-based bets with the odds stacked in our favors. One thing that I'm highlighting here is BTC USD open interest. So what is open interest? First of all, very quick explanation. I did say I was going to make this short and sweet. We are going to get into some of the news. We're also going to be talking about the fact that today we're going to get the FOMC. In my opinion, I do not know why everyone's even talking about this. It's so annoying now to see my feed constantly littered with it. And yes, it is going to have an impact on the price, certainly if there is a curveball thrown. But in my opinion, they're just going to say the exact same thing that they've been saying in Jackson Hole and for months now. We're going to have to continue to fight inflation. And the only way we know how to do that is with tightening the financial conditions. And this is why markets are throwing a wobbler. They've thrown a wobbler so far, and it's kind of natural to expect that they're going to continue to throw a wobbler because things are going to get worse. Conditions are going to get worse. And then we've got the CPI tomorrow, so we'll get into that. But open interest essentially is the amount of new contracts or contracts open, usually in the prep market, so the perpetual futures contracts. These futures are essentially derivatives of the actual underlying assets like Bitcoin, whatever it may be. This is Bitcoin specifically. So this is people opening up contracts. Now, there's a huge correlation here And one thing that you want to see in regards to a bearish downtrend or a bullish uptrend is that your open interest is going with it. So throughout this whole time, we've seen open interest grow. Okay? We topped out here. We then saw a pullback. And during this time period that we've essentially just gone sideways, your open interest, in actual fact, has been going up. So what can we get from this? Well, I'm trying to figure that out. In my opinion, what's happening right now is you are getting shorts filled. You are getting the masses told to buy back in June. And if this was the bottom, it's my opinion that you'd have seen that play out by now. The strength, if this really was the generational bottom, do you not think your institutions, or a good time to buy, do you not think your institutions would have done so? Your big money would have done so? Do you not think you'd have seen that play out in the price? Price action is king. Forget any of your indicators, and yes, they do help. Forget your EMAs, forget everything. If you can understand price action and what that is telling you, so what is price action telling us right now? That we're in a range, okay? Even though we've got huge amounts of open interest opening, and you've still got people calling for this as the bottom. People actually called for June as the lows. Now, maybe if you bought right down here at 17,000, you could still be on that boat. But the fact is, we put in weekly, daily, and even hourly closes below where we were in June. So that, for all intents and purposes, bottom calls have already been wrong. Just ask yourself this question. If this was the bottom, do you not think that we'd have seen this? The only thing, or seen it play out in the price, the only thing, the only bullish scenario I've got is if this was a double bottom, you need to get back up to 25k and you actually need to take it. Then we can flip bullish, okay? Or to a degree, flip bullish. There's also a lot that's got to go on elsewhere, but we haven't seen that yet. So that is telling me that there's still, in terms of probability, a lot more reason to be bearish than there is bullish, just simply based on what the price is doing, nothing else. When you have open interests opening like this and that have gone up with largely, you know, you've seen an increase in open interests and it continues to go up and to the right whilst the trend has been going down, that very much supports the trend. So do the majority of your indicators, ladies and gentlemen, and we can do that for you very, very quickly. I'm not sure what indicators I've got on here. We've got the RSI continuously, and people go, oh, well, bullish divergence here. Yeah, let's deal with that, right? That, I think, has encouraged people, and you've seen that bullish divergence based on how significant this is. And from a trading point of view, again, one reason that this market hasn't sold off yet is because of where it is. Most traders have been taught not to short support, and it's even including myself, by the way. You don't want to short support. You'd rather wait for the break, the confirmation that that is the break, and that you're now back in a trending market from a ranging market. You have not yet broken here. The issue is when you do, you end up in a situation like you did the whole way down, and you're very much setting up nothing that much different to everything we're doing. This is a bleed out, guys. This is a 2018 style bleed out that's going to lead to a similar event that we saw over here. And we're just waiting for that triggering moment. And people are kind of going, oh, well, Bitcoin's showing a lot of strength right now. In some regards, and it's actually showing relative strength against the NASDAQ and other stocks. But it is until it isn't. There's not a bullish case here, in my opinion, to be had for crypto. And it's crazy from a channel called All in Crypto. And we are all in crypto. We trade the crypto markets. We're all in stable coins. You know, crypto is our life. However, for now, we're not investors. And that's the point really to stress. And that this is just holding on. And the fact that open interest is really climbing here shows that you've got a lot of contracts opening and you are going to get a decisive move. I have not ruled out the fact that you may... what are we on here? What have we got? The fact that you may get some sort of a final push to the upside to try and get rid of some of those shorts that will get sort of, you know, be quite violent because you're getting rid of those shorts, and then a huge slam down. So you get some kind of a push. It's typical, if you look at what's happened the whole way down here, before we've actually seen that downside, you usually get some sort of a push and then a slam. Maybe that was the push and then the slam is now taking place and you're now bleeding out going into something like this. Because you see you get a push, then the slam. You know, always push, slam, push, slam. This is kind of how things go, guys. And you can even see this top here, you got a push and then you start to slam. So maybe that is still a possibility, but to me, I wouldn't bet on that. I'm not interested in longing this market right now. And we're looking at swing shorts as a group. And we're actually, you know, trying to day trade it daily, which is easier said than done when you're in a range bound environment, certainly when you get the price action like you did yesterday. But, you know, better days will come from a sort of trading condition perspective. So open interest essentially, in terms of a trend, and this being a downtrend, is very much supporting it. What way this breaks, and I think many people are talking about this, is really, in my opinion, going to be to the downside. And I think you've got lots and lots of people that have essentially opened up here. You've got people that are going to be longing it, and essentially, in my opinion, the longs are just filling the shorts. I'm going to take that to the downside. Once you lose this 18K floor, it's a trap door, and you're going straight down to the downside until you get to your next sort of price action area of consolidation, which, you know, takes you roundabout to where I'm talking about with around about 14K. Doesn't have to happen. It could flip, but we've already told you where we'll flip bullish. We're not there yet. We keep on keeping on until there's reason to suggest otherwise. The British pound, choppy as Bank of England reiterates Friday bond buying deadline. So the Bank of England is now saying, even though they've upped the amount of bonds that they're willing to buy, they've upped the amount of money that they're willing to spend and print and proliferate the money supply, central banks are screwed. They have to choose between proliferating and completely devaluing their currencies, or completely imploding their monetary and financial systems. There's systemic risk about right now, guys. Until that gets resolved, you should be cautious. We've been maintaining a cautious bias really since the bond yield curve at the start of the year, and then actually didn't really take things that seriously in terms of, okay, maybe this fear is warranted, you know, really back in sort of March, April time. And we've been right so far. Doesn't mean that it's going to continue to play out in our favor. However, looking at everything, you know, why is crypto having a green day today? It's just because the futures are green. The UK market's green. Gold's green. You know, and the dollar's having a tiny bit of a rest. Dollar's running right into resistance here, but it's put in and is potentially going to, on the weekly, put in a new. Did it put in a new daily high? No, it didn't. So this is resistance. This box is resistance. This is 2001's sort of topping price action. Okay, so it's natural that you're going to have resistance here. So from a trading point of view, you're right at support. Dollar might take a break. People are going to long that. The problem is what do the Fed say today? And what do they say? And what does the CPI come out tomorrow? That number misses and is bad. Even if it comes out forecasted, by the way, it shows that the Fed and what they're doing is not really working that much. So they're going to have to keep going. And on that note, we're going to bring you to this. It's got the FOMC today. This is from Fed Masters. Say central bank has yet to make a dent in inflation. New York, October the 11th. So yesterday, this is from Reuters. Reuters is actually really good to follow, by the way, guys, for sort of general economic news. Federal Reserve Bank of Cleveland President Loretta Mester said Tuesday that even with a large amount of rate rises this year, the central bank has yet to get surging inflation under control and will need to press forward with tightening monetary policy. Unacceptably high and persistent inflation remains the key challenge facing the US economy, Mester said in a speech giving before gathering held by the Economic Club of New York. Despite some moderation on the demand side of the economy and nascent signs of improvement in supply side conditions, there has been no progress on inflation. So there hasn't. People are just so fixed on interest rate hikes, and understand why, because of the correlation that we have with interest rate hikes. Of course, it's a metric to show what's going on with liquidity, and is it going to be free flowing or not? Is it going to be restricted or you know, sort of progressive? But inflation is actually extremely detrimental to an economy, to people. To it even has a, you know, liquidity gets taken out of. So at the moment, liquidity is going and you know, the big driver is going back into having to pay the debt off. That's why we're seeing the dollar get a bid. If you're upping your interest rates, well, you need more dollars to pay off that debt. So that's the demand side of things, right? Problem is with inflation is, okay, well, you also need now more dollars to pay for your fuel, to pay for your gas, to pay for your electric, to pay for your, you know, whatever it may be, food, whatever it may be. So both are very destructive and both are now out of control. And in fact, inflation isn't. So what happens today in the FOMC, I think essentially they're just going to reiterate the fact that, look, we need to keep fighting inflation. We're going to have to keep going forward, guys. And you can see that getting priced into the, where are we? Is this a 30-day Fed Fund futures? Yes, it is. There's some red candles right there. And some wicks, some shadows, some pretty heavy shadows coming off it. And you can see this is going down. So, interest rates have already been blown out the water. I think that's going to continue to happen. I think the dollar's going to continue to shock people. And this is a lot more of what's going on. Dollar also for sort of FX reasons actually is likely to get a bid because the UK is looking like it's in trouble. The euro is definitely in trouble. UK is 100% in trouble as well. And lots of other markets, FX markets or FX currencies are as well. IMF welcomes UK's fast-tracked budget plan, urges government to work with Bank of England. One reason we are in this mess is because of globalization. Globalization has had many benefits. It's why actually we've had extremely low inflation. But when you try and look at the EU as a perfect example and bring everybody under one roof and say you all have to do this, even though everybody's needs are different, it just simply doesn't work. I'm all for decentralization. It's why I'm in the crypto space, and actually localization. So, you know, I'm all for a country being in charge of itself, not giving those powers to individuals that have never, not necessarily lived there, but, you know, really, you know, don't know what the needs of that in a country are, or just sort of getting it from secondhand information. I think countries rule themselves better when they are under their own regime, obviously providing that that regime isn't corrupt and are sort of more localized than centralized on a sort of global scale. Because how can you run it properly? You know, it's things start to sort of show up. So today we've got the FOMC. That's coming out later. That's going to be interesting. Might already be out by the time you guys are watching this video. And then tomorrow we've got the CPI print. The forecast is 8.2, which is only 0.1 lower than the prior. And markets tanked the last one that we got, which was 0.2 lower than the prior. So still certain phases coming down, but at a really minuscule and pathetic rate. It's still a real problem. So, and what the sort of Bank of England and other banks are doing are now going, oh, we better support people's energy bill because they can't pay them. So we're going to have to print to do that. We're going to have to get into more debt when we're upping the cost of that debt. And we're essentially going to have to print money to hold up a bond market, which is completely dying and no one wants to buy. So this is a real bad situation across the board. We're not meaning to be pessimistic or doom and gloom. If you find these depressing and can't deal with it, maybe this isn't the channel for you. You guys are only going to get real and informative and genuine information from me and thoughts, nothing else. I'm not going to fabricate anything. I have no reason. We've already told you that if this is the bottom, so be it. Doesn't bother us. We're just trying to. All we're doing is taking a sort of. We're trying to be on the side of probability. Doesn't mean that it has to play out, right? So, you know, if for example, it's kind of like Chelsea playing. I don't know who a good example would be. I'm not really a huge football guy. I should probably have never even mentioned this. It's kind of like Chelsea playing West Brom. Okay, I'm going to go with Chelsea to win that. But doesn't mean they have to. But your money's safer betting on Chelsea. Probably a bad analogy, but this is where I'm kind of going with you want to stack the probabilities on your favour. Certainly if you know that on the West Brom team, all their best players are injured. And on the Chelsea team, they're in the best shape they've ever been in. You can kind of get a feel of which way it's going to go before it goes. And this is what we're trying to do when we're looking at Bitcoin and crypto right now. And this is the environment that we're in. So FOMC today, CPI, I did say this was going to be a short and sweet one, but I love to ramble on and talk to you guys. Hopefully you've enjoyed this content. If you have a like, it's always appreciated. So as a comment, watch out. Today, yeah, I think they're just going to reiterate a lot of what they've already said. Tomorrow is going to be the big one. Certainly if that number comes out disappointingly, if it comes out higher than forecasted, and even if it comes out forecasted, very detrimental. There is always a flip case that maybe it comes down shockingly lower. Then, and I wouldn't trust central banks not to sort of fiddle around with things, then maybe we get some sort of rally and relief. But in my opinion, if things continue the way that they are, it's going to be short-lived and downside is imminent. All I've got for you in this video, guys, you enjoyed the content, like, always appreciate it as a comment. I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday, guys. See you in the next one.